Investors and traders, welcome to the channel. Today is 29th of October 2024. Hope everyone is having a great day. We will be taking a look at the key US tech stocks and the ETFs in this video. As always, this video is for educational purposes only and it's not a financial advice. Just a note before we continue, I will be actually traveling from Thursday onward for quite some time, for about a month. I will try to do as many videos as possible, but the schedule might be a little bit off, especially over the weekend. I will try to do the weekend videos for sure, but during the weekdays, because of the time zones and the travel schedule, some of the videos I might not be able to post. So I do apologize for that. I hope you guys will understand. And I thank you guys for that. So let's take a look by starting by taking a look at Meta, which used to be called Facebook. And I believe we have the earnings coming up tomorrow on the 30th of October. And we this is we were taking a look at when we did the shorter video last week, and I had mentioned that Meta was actually setting up for a move higher, and there was a possibility it could get into this gray box, but it was really at the 38.2% retracement right here, and that was a really key point for us, because that's the 38.2% retracement of this swing high to low. And also, if we take a look at the symmetry in this move higher, the market has retraced as much as this much. So if we were to anticipate this kind of a move, I don't know what the earnings might look like, but there was this possibility here. And what we have seen now is that actually the market has also broken above today from this trend line as well. So the Meta stock, after retracing to about $263, $563, excuse me, is pretty much trading. It closed at 593, and I think after market, because we had some earnings come out from the likes of Google, it's trading at in the aftermarket at around 602. So with the earnings, it's always a binary. It's a binary event, and unless you are able to utilize options related strategies and mitigate some of the risk from the surprise side of things, um, it's always good to be vigilant about around the earnings time. So here, it looks pretty good from this perspective. From the technical perspective, we have this trend line, this one as well. So it looks like the earnings might actually be good, but only we'll find out once those are out. So that's on the daily chart, and if we take a look on the weekly chart, then Meta has actually got a ABCD, which the CD leg is being extended one by 1.618 times, gives us a target of 690. So that's quite a while away. And what we have seen is once it broke above the 1.272 extension and 1.618 expansion of its entire bear market rally, excuse me, bear market starting from September 2021 all the way down to 31st of October 2022, we have seen it pull back, touch this level again, and it seems to be rejecting it, although the week is not over yet. So this is what we're looking at Meta, and Meta is one of our preferred tech stocks. Now let's take a look at Tesla. This is the daily chart of Tesla, and what we are looking at is that Tesla had its earnings out. We saw a pretty big gap in Tesla, and then we had, it's basically took the highs out of the 11th of July. Let's just confirm that 271 and 273. So in a way it's good as well, because it took out this swing high, but it has sold off for a couple of days. So the good thing is we are looking for a clean break of this 11th of July highs, and if we move to the weekly chart, then the ABCD for us actually points First it was a smaller one, about 314 bucks, and then as high as 340 bucks. So what I think is we are actually in this red ABCD, and it could take us to about 340 to 350 bucks per share, and this is a really important level, because it's a target for us, but it's also pretty significant resistance, just because the number of ratios which come here. We have the ABCD completing, we have the 1.72 expansion, we also have the 78.6% retracement coming here from the 21st of November 2021, so going a couple of years uh, before. So really pivotal point here at 340 $350 per share level. Now let's take a look at Google. I believe Google had its earnings out, and the stock has jumped quite a bit to 180 after the earnings are out, which is quite good, because what we were looking at was around 194 is a major pattern completion, and we have seen the stock actually move lower by about 23%. 24% roughly ever since those highs, and then now where the stock is, let's do a retracement, uh, and here, yeah, the stock is nearly around 78.6% retracement. So what is interesting is if we move down to the daily chart, and here this is how we have been actually looking at it, and we were looking at these LT stands for left translation. So this is the phase of the cycle, and based on this, if you just look at this side, it was a right translation. So what it means is it was in a phase which was moving higher, so the prices were actually taking out or moving up on the right hand side. So they'll take out the swing on the left hand side, and the right hand side swing was higher, and then we began to get into a phase where actually the prices were left translating, so that you had a swing high on the left, and on the right you had a swing which was actually lower than this, and the bottom would get taken out. Now what is happening is, with this, it will still be below this all-time highs which had it reached, and it'll be interesting to see how the stock will close for the day and also for the week, which could mean that this smaller cycle which was left translating, it might actually be over, and then we'll have to wait and see whether this bigger cycle that we think might have actually been completed for the Google stock, whether that is still dominating, and then whether we could see, this being a lower high compared to this high. So really interesting time for the Google stock, and I will be keeping a close eye on it for you guys. Now let's take a look at Microsoft. So the Microsoft, here you can see it completed this ABCD right here, and it has retraced, but you can draw a trend line like this as well. So you can see it's in a range bound formation, and it looks like it also wants to move a little bit lower as well. And on the weekly chart, this is where we were actually following it. One of the things that we're watching for is this smaller ABCD in red, which could see it come down to about 360 to 355 bucks, and then it could actually come as low as around 330 as well. So it's right around 436. It's a pretty important resistance as the 61.8% retracement. I don't know when the earnings are out for this. So the earnings are out tomorrow as well, so a big day for it. So we'll see what the earnings will look like for Microsoft. A really strong trend, you can see that, but even the trend was really strong here, but it still went through a correction, and for quite a while. So really strong trending stocks, but they will go through the correction phase, and we have a number of these patterns which were completed around here, and it looks like we are in a sort of a corrective phase in Microsoft. But of course, with the earnings, if they are super good, we could have really surprising results. So we'll wait and watch what happens tomorrow. Now let's take a look at Amazon. So Amazon earnings are out on Thursday, and here what we are looking at is basically Amazon completed this big ABCD here, and then it had a pretty big correction to the downside by about $50. So we had been actually watching for this 78.6% retracement, because we think it might actually be this ABCD pattern, which could actually take it right towards the bottom end of this range one more time. But with the earnings coming up, the stock is actually strong. You can look at the moving averages, you look at the trend line, but it did look like it wants to do this ABCD correction, and also because of the completion of this big black ABCD here. I thought a correction is actually warranted here. So we'll have to wait and see what the earnings will look like. Also note that from the retail side, we are just about to embark on the holiday season, which is usually a pretty big sales day for the retailers. So there could be some good stuff coming out as well. Possibly we'll have to wait and see. Here you can see that's just been in a trading range for quite some time on the daily chart. So let's see what the earnings will look like tomorrow. Excuse me, Thursday for Nasdaq. Excuse me, Amazon. And then if we take a look at Netflix, it had its earnings out early in on the 17th of October, and it's really interesting because at one time it was really struggling to make new all-time highs, and then it did, and then now it has gone right towards this expansion of a 1.618 expansion of this swing, which was this little correction. Its correction, little correction it had right here. So I don't have any further targets for it, but I'll have to do some work to come up with further ABCDs working in this one. So I'll try to do more work on it. Now let's take a look at Baba. So here we go. So Alibaba, I think I'll do a special video on just the Chinese stocks. Um, it had a breakout phase. In my opinion, we are still in a breakout, but it's having a pullback right here. The really key thing is it needs to get above this 130 level, and then our target is around 160. Which will be 38.2% retracement. So it's interesting to see that it had a really nice breakout round here when the Chinese government actually came out to prop up their banking sector or the property sector, but that sort of stimulus also is working in other sorts of other asset classes, including stocks. So that's why we saw a big rally here. It's pulling back. It could pull back a little bit further into, maybe in this region of about 90, which is the very close to 61.8% retracement. And it could actually pretty interestingly set up like an ABCD like this. So this is what we are watching. I think Alibaba is preparing for a breakout out of this really long consolidation, and it had done something like this before as well, and it started a big bull run. So let's keep an eye on Alibaba. Let's take a look at Zscaler. So this is a very volatile stock. And here in this one, the pattern that we are watching, it's still working because our point C has been held. So we are shorter time. Possibly we can have a stab at 220. It needs to get above the swing high, of course. There was a possibility that if this point C is taken out to the downside, we could be going as low as about $100 or 103. Close this gap around here, but point C is still held. As high as there's a possibility if it begins to get above 220, we could be in this new phase of ABCD, and the stock could hit 320. Moving towards its all-time highs. But a pretty volatile stock. If you have been in this one, you'll agree with me. And now let's take a look at Roblox. Okay, so the Roblox, this one is in a really long consolidation, as you guys know. It's been following these ABCDs quite nicely, and this is where that short seller Hindenburg, I think they came out and they did a piece on Roblox that they went short. They had their own reasons. I don't remember those reasons. That actually after that news, the market actually sold off quite a bit. But if you look at this, the trend line is still held, so that's really good. I'm not drawing ratios here, but this is like about 78.6% retracement. This is more like 50% of it. What is important for it is to be able to get above this resistance right here to be able to target these highs around 53, and then once it's able to do that, then our ultimate target is for this stock to get around to this 67, which is the 38.2% retracement. For sure it's taking a really long time. So there is a lot of accumulation. Now, one thing to remember is this stock was brought to the market through a SPAC, and then a lot of insiders who had been investors in the stock for a really long time. Some of them actually wanted to also get out and get some money back for them. So this is why we have seen this, which is a typical cycle of IPOs post the dot-com bubble, where actually these tech companies, they're brought to the public markets much later on in their cycle. A lot of the private investors, they remain invested in the company for a long time, and they try to get as much value through the private placements as much as they can, and then at some point they actually bring it to the market and begin to exit their positions. Now let's take a look at Shopify. So the Shopify stock, you can see that it's just not been doing too much. I think we could still maybe have a stab at about $100, or at least this ABCD cycle around here. But this 82 level is kind of holding it back. Um, so with this fourth quarter coming up, with the sales for holidays, maybe that might have some impact, but I do not know. But you can see that this 38.2% retracement of these lows to these highs around 82 level is just capping it. There was a chance there was a breakout out of it, but it only lasted 1 week. There was just no follow through. It just fell back. So it's still kind of being capped, or is being held back at the 82 level. So this is what we are watching in the key US technology stocks that we like to follow. While we're at it, let's actually take a look at some of the ETFs as well. So this is QQQ. QQQ has made a really nice recovery. I think it wants to make a stab at new all-time highs. It might be able to do that just by a bit, because we have got loads of big companies reporting this week. So here we can see that it's right into this zone that we had been watching, and if we take a look at XLK, it's doing something similar as well. It's really interesting to see the remarkable recovery these stocks have had since 5th of August. So one of the things is this. Although these we are watching for a lot of these patterns, and these patterns are being completed, but these patterns have also had pretty good retracements as well. So let's take a look at what sort of retracement we had from here. So we take the top and to the bottom. That was a 20% move, 5th of August. It came right from the completion of these patterns. So we've already had about a 20% correction, and then right at the key levels as well, so it's 38.2% retracement of the lows of going back to October 2022. So this entire CD leg. Now a bigger correction perhaps could also come, where we could see a retracement of this entire ABCD structure going back to the lows of the March of 2020. And here we go. I'm going to remove all of that. And in that case, it comes right to the structure point B around the 172 level, if that were to happen, and it could happen. Now, one of the things is that we are also watching other markets in the other segments, especially the US dollar, and the situation with the debt markets through the eyes of the treasury bonds futures. So there is actually one thing that the investors would still want to be long the assets. which means that holding things like Bitcoin, dollar for Bitcoin, gold, and also stocks as assets as well. So the kind of bear market a lot of people might be expecting, we might not actually get that, because we might actually begin to enter an environment, especially after the elections. It will be it's a really a binary event, and if you get into an environment in which the interest rates are likely to come down and come down, quite a bit, and then we might have the taxation um, uh, moving lower as well. That's something the bond market is not likely to like. So we could see more of a sell-off in that. But in that sort of situation, the investors would want to hold assets. So we could actually see Nasdaq begin to outperform quite well. And it's also possible we might see some sort of reaction, maybe perhaps a knee-jerk reaction. I don't know exactly how the situation will be. That where we begin to see the kind of pullbacks that we have been looking at based on these patterns being completed, but then we might actually begin to see a move where these assets actually, especially Nasdaq, begin to move higher actually. So there is a possibility this bull market, which has been going on for about 15 years, might have still some time to go, actually. And this what we might witness might actually turn out to be retracements. So this is what we are watching in these markets. Thank you very much for watching the video. Just a reminder that I will be traveling later this week, and I will definitely try to do the weekend videos. But some of the videos which we take a look at during the weekdays, those might be delayed because of the time zone differences and travel schedule. I appreciate that you'll understand. So thank you again for watching the video. Good luck, good trading, and speak to you guys soon.